What is going on, everyone? So finally getting around to the GEX levels indicator video that I've been promising everyone. Thank you so much for all the questions. And I've taken this video and I'm going to split it into different chapters because I do want to spend time actually going through what GEX is. And so I have a presentation to kind of walk through. If you already know what GEX is, you can kind of fast forward through that. But the chapters that I'll have in this video are going to be the overview of GEX. It's going to be the overview of the indicator. So we'll walk through this page and kind of demo the indicator. And then I'll talk a bit more about how I use the indicators in my trading. And yeah, so if you need to skip through some sections, feel free to do that. But I would love for you to kind of stick around and watch the whole thing. I learned a lot as I was putting together the presentation here. And hopefully you'll get some value out of this. So with that, let us kick over to the presentation. Okay, so this is the presentation I put together. This is not meant to be like a comprehensive deep dive into GEX. There's a lot that you can learn, but I just wanted to touch on the core concepts, but go a little bit deep so you can kind of understand the mechanics, at least as I understand it. And I'm open to GEX experts out there. Post some comments and let me know if there's anything I missed. So the first concept is a market maker. So these are, or you might hear them be called as dealers, right? So they're options dealers. And so their job is basically to take every trade, right? So if you buy a call or a put, they have to sell you that call or a put. Like that's their job. They don't have a choice. They're making the market. And that's just what they do, right? And their whole job is to just stay neutral. So they don't care if prices go up, they don't care if prices go down, right? So they don't think binarily. They don't think like up or down. They just think in terms of volatility. They think in terms of exposure. And so they don't care about direction. As soon as they sell an option to you, they start hedging, right? So they can stay neutral in their position. And the idea around the whole concept of hedging is that it basically forces continuous rebalancing by leveraging futures against the options so they can stay neutral. So it's not about their discretion or anything. It's just basically what they have to do. And so, there's the whole thing of dealers have to hedge like at every tick just to make sure that they are neutral, which means that, for SPX options, they're going to be buying or selling ES futures, right? And in theory, right, and from what I've read, like this accounts for, up to like 15% of the daily activity in the futures market. And so that's just kind of one thing to keep in mind and why I think this is just an important concept to have in your toolkit, right? Mechanics around the market. So GEX stands for gamma exposure, but then the question is, well, what the hell is gamma? And then to really define what gamma is, we have to actually talk about another metric, which is called delta. So gamma is what's called a second order kind of options metric. And a primary metric that options traders focus on is called delta. And so delta measures how much an option's value changes for every 1 point moving in the underlying asset. Meaning that, if you buy SPX options and they have a delta, a call option, you have the delta of 0.5. If SPX moves up 1 point, then that option will gain 0.5 in value for every move of SPX, right? And so basically when price moves, the delta changes, right? And the whole idea for market makers and dealers is, they have to then hedge that change in delta to remain neutral. Now gamma, which is what we care about, gamma is basically, it measures the acceleration, right? It's basically the rate of change in delta. So it's like a derivative, it's a derived metric off a derived metric, off a derived instrument. Oh my God. And so, that is what we're measuring as far as the exposure there, right? And so high gamma means that delta changes rapidly, and dealers, have to adjust and kind of be aggressive in their hedging. And then, so the other thing about gamma is that it's, gamma becomes its highest when the options are at the money, meaning that the option strike price is near the actual price of the underlying asset. And so as, price actually moves to these strike levels, that's where you expect gamma exposure to increase and where hedging to kind of start happening. And so that's kind of how that works. there's a note on 0 DTE gamma exposure. So the gamma exposure on 0 DTE levels and options is obviously much higher because 0 days to expire, meaning that the options will expire today, right? And so those levels are very significant on a daily basis. And from a gamma exposure level, like 0 DTE can, it can be like 5x more gamma than that of like a 30 DTE option at the same level. And it's just one thing to kind of keep in mind. And then there's a formula that kind of talks through like how GEX is calculated per strike price. It's not going to get into it, but it's a whole thing. So how does hedging work? So the whole idea with hedging is that, you buy a call, the dealer sells it to you, and then they will also buy futures, right? You buy a call because you think something's going to go up, dealer sells it to you, but then they also buy futures to hedge, to make sure that they're moving with you. And then as the price moves, they will kind of rebalance, right? Buy and sell. And so as price rises, the call gains value. So the dealer then has increase in exposure, and he has to actually buy more futures to stay neutral, right? And so this helps push price up further. And then, the opposite happens when price falls, right? Like if you have calls on, price goes down, the calls lose value, the dealer's exposure starts to decrease, and the dealer actually has to sell futures to stay neutral, which then, pushes prices down. And so that's essentially how things work there. Now, from a trading perspective, there's two regimes that are important for you to keep in mind. One is going to be positive gamma exposure, and the other is going to be negative gamma exposure. So when you're in a positive GEX regime, dealers are long gamma, meaning they're long the acceleration, and they trade against the move. So that means that if price rises, you can expect dealers to sell into it. If price falls, you can expect dealers to buy into it. And they act as shock absorbers for the market. And so when I think about positive gamma states or regimes in the market, if the market is trending, let's say it's trending up, but we're in positive gamma, I expect it to slowly stair-step trending up. And, if the trend holds as price sells off, if you get like a sharp sell-off, those are probably good areas to start buying back into it, because dealers will hedge by buying, right? And, price can kind of continue stair-stepping, sideways up, sideways up, sideways up. Same thing for down as well. Or it could just be a ranging market as well. And so this is where you look to, if there's a really strong breakout, like look to fade it for scalps. Mean reversion tends to work a bit more. Volatility is a bit lower. And that's kind of how you would trade in positive. In negative GEX, it's kind of the opposite. This is where negative GEX, in that profile, if prices rise, dealers will buy more into it. And if prices falls, dealers will sell more into it. And basically just accelerates price, And when you're from a trading perspective, like knowing which type of regime you're in will help you, like you should be able to adjust your stop strategy and adjust your take profit strategy based on what profile you're in. And I'll talk about this a bit more in the trading section. But essentially, from my perspective, when I'm in a positive GEX mode, I have shorter profit targets from a scalping perspective. I have longer profit targets in a negative GEX perspective. I size more in negative GEX, but I have tighter stops. I size smaller in positive GEX, but I have wider stops. And so that's kind of how I leverage the regimes in my trading. So there's three concepts for levels in GEX that you have to keep in mind. So there's going to be your gamma flip or your zero gamma level. So this is basically the line in the sand that says, above this is where price, GEX will be positive. Below it will be where GEX is negative, right? And so if GEX is positive, you'll expect the fade moves, or you expect dealers to fade moves. And if GEX is negative, you'll expect dealers to follow momentum. And then you'll have your call walls and your put walls. Again, these are kind of your structural high and low for the day, depending based on the options market. You always want to compare these levels with actual market structure level as well. And one thing to note is the levels themselves will move, right, as options activity is traded. And so that's another thing to kind of keep in mind. Yeah, and so I think Spot Gamma did some back testing some years ago, and they said that like, hey, your call wall, the biggest level tends to hold as the high for the session majority of the time, and then the put wall tends to hold as the low for the session majority of time. But again, like a Trump tweet can blow through levels, some news and stuff like that, like will mess things up. But if there's no like external catalyst happening, in theory, these levels should hold for your more or less the high and low of the day. But they also move all day. So that's one thing to also keep in mind. There's that, but also continue leveraging market structure and all that. So the indicator that I built is actually using GexBot Classic. So this is a screenshot from that platform here. And if you are using the GexBot app, like it shows you more. It shows you like the histogram. You can kind of see all the levels, right? Whereas the indicator that I built on ATAS only shows you the major levels. So you see this major level here, you see these major levels, this major level, this zero level. So these horizontal lines are the ones that'll be plotted on the ATAS indicator, on the ATASX. They do have an ATAS Classic indicator that gives you this whole like ladder experience. So if you're on Windows and you have ATAS like this, you can get this type of view on your chart. So it's really good. For me on a Mac, I'm only going to get these horizontal levels, and I reference these ladders here off on the side as I'm trading, because you can kind of see here like price, it's like we're in positive gamma because we're above the zero line. You're getting to this cluster of all these strike prices, so you can kind of see like price has a lot to work through. It gets to this major level, it tested it 1, 2, 3 times, and it fell over and then kind of got back up, right? But with the histogram, you can kind of see like what are all the strong levels that we have to work through as we move towards those major levels. And so that's one thing that you get from either having the classic integration or leveraging GexBot itself. But for the indicator, we just have the major levels plotted there. So other concepts that are built into GexBot and the indicator that I've built is volume gex and open interest. And so volume basically just shows you like, hey, this is what's happening right now. Open interest shows you more of the structural, like where are people positioned, where have they been positioned. And so you can kind of use that as your gauge of confidence in the regime from the indicator perspective. But if you're using the GexBot app itself, or maybe even the ATAS Classic integration, and if you have volume and open interest, if you see that those agree at a certain level, then like, okay, this is a really important level to pay attention to. I'll talk about the indicator and talk about how things can kind of diverge when it comes to volume and open interest and what that means for the regime that you might be in. And another thing to keep in mind is the time frame for the expiry of the options for the GEX levels. So GexBot offers 3 types of time frames. So they offer a full, so this is like all expiry within 90 days. They offer latest, so this is going to be 0 DTE, so everything expiring today mostly. And then they have next, which is like the next week, next day type of thing. I will say that 0 DTE represents the majority of GEX and options market. So even if you have it on full or next, it's going to be skewed to the latest all the time. And so me personally, I always use the latest, but it's good to kind of look at full next just to see if there are other levels to pay attention to going into the next day. And so I put this table together to kind of talk through how futures is influenced by the hedging that happens on the index options, but then also on ETF options. And I went down the rabbit hole a little bit, learned a little bit, but definitely not an expert at all. But I did want to walk through it here. So if you have institutions who are buying or selling SPX or NDX options, these are mostly going to be institution because the contract value of what you control, the value is so high, right? Like, SPX is probably nearly $1 million now, and NDX is over $2 million now. And so, it's going to be bigger money as you kind of buy those options and all that. And if you wanted to hedge that as a dealer, like you have one step, you would just buy or sell futures, right? So SPX, you'd buy or sell ES futures, NDX, you'd buy or sell NQ futures. And so that's how that works. There's a direct kind of correlation between those two. Now for the ETFs, this is why it's important to have the ETF levels, because if retail folks buy or sell SPY or QQQ options, they do that because like the value of those is much less and it's easier to get. But if you wanted to hedge that, then obviously you would just buy the shares or sell the shares of the ETF. So you'd buy or sell SPY or Qs. But there's this process called arbitrage that other like intermediary firms basically help kind of arbitrage the difference between those trades on the SPY to then make those same trades on the ES, which would then influence kind of ES futures. And that is the reason why it's important to have those levels. And the thing I like to look for is that when you see the institutional and the retail level gamma exposure in the same area, then you know like, hey, this is an important area for me to watch because everybody's kind of concentrated there. And so this next kind of table just shows what I talked about in a more visual way, but basically, SPX, NDX options, ES and NQ will move directly, correlation, and in SPY, QQQ, gold, they'll move the futures through an arbitrage process. Like everything that happens in the options market, whether it's on indices or on the stock market itself, they influence futures, and that's why it's important to pay attention to both. So a note on gold is that it behaves a little bit different than equities only because gold is a safe haven. So everybody buys gold. And so investors and traders are going to be net buying calls. And so they're expecting price to go up, which means that the institutions and the dealers are going to be net selling those calls. In that, there's always going to be this dynamic of like a self-reinforcing loop when it comes to rallies or sell-offs. And so you'll just have to kind of keep that in mind as you see gold prices move to levels cross zero and all that there is the possibility for some pretty hefty spikes just because of that self-enforcing. And so you heard me talk about this previously, but the walls, they move, right? So the levels, they'll move up, they'll move down. And I won't go through every single one of these examples, but definitely feel free to screenshot it. But like in the example where if price is trending upward and then you see like the major gamma levels move up, they move higher, right? That signals that options participants are willing to pay higher strike prices for their options because they expect price to get actually past that higher price, right? And so that becomes more of like a bullish sentiment type of tell. And so like it's things like that. Also, if you see like the zero level, it moves closer to price, then okay, like expect a little bit more volatility, ahead, just because now we're not sure like what regime that we're in, and maybe we'll kind of bounce around. And so that's just one thing to kind of keep in mind. Like the levels are not static, they move around, and depending on the direction they move in relation to how price is moving, it can kind of give you an indication of what the options market thinks as far as like their bias, and then you can kind of leverage that in your own trading. And so there's a checklist of what you should look at when you're looking at the GEX levels on your chart. First thing is you always want to make sure like where is the gamma, zero gamma, and the gamma flip level. This basically is that line in the sand that tells you when we'll get to a positive versus a negative profile. And then you'll want to look at where's the call walls and the put walls, because that becomes kind of your like boundaries that you can expect from the options market. And then obviously look at how those boundaries match up to market structure, right? So you can kind of see, okay, like that could be like a reversal point, support, resistance, things like that. Also could be a target because price does like to get pulled to these levels. And then the concepts of volume versus open interest. So you get a view of like what's happening now, what's structurally happening, and if they agree, then that's definitely a stronger signal. If they disagree, then be open to the price movement that you're seeing could get choppy or could start transitioning. And then if you're using the histogram either on GexBot itself or you have the classic integration, you would want to see like just where the bars are, how big they are, and just see like what are the strike prices that price has to go through before it gets to the major levels, so you have an idea of how things could progress through that. And then obviously you put your time frame, so 0 DTE, next, last, and all that. So I guess a recap. So you want to keep in mind where zero gamma is, right? You want to keep in mind what the call and put walls are. You want to keep in mind positive and negative GEX. And then when levels between the different sources match, that's higher confluence and higher conviction levels. And then just one thing to note about GEX as a reminder, that it doesn't tell you where the market's going to go. I mean, it does tell you like where options traders think the market's going to go. It tells you that, but it's really meant to tell you like how you can expect price to behave when it gets there. And in using that, then you can trade accordingly. So now I'll be moving on to the actual indicator walkthrough. And so we'll get that kicked off. All right, so I'm starting to build out all the indicators here. So indicators.profitnotiondaily.com. So you can come here and see, like, we have the Delta candles and now this new GEX one. Again, as a reminder, you do need GexBot to leverage these levels. And I'll quickly show what you get with GexBot. So this is what GexBot looks like. You know, it is a lot, right? But it is all very important information. The indicator itself, so it's only going to show you, it's not going to show you the history. So like you can kind of see we'll take away the history, and it's not going to show you the histograms, right? So it's really only going to show you the levels, right? So you'll see like here's 0 gamma, here's a positive level, here's a positive level. We're above 0 gamma, so we've been in a positive gamma situation, but this is what it's going to show you. But it's going to show you from multiple sources, right? Sources here, and on the indicator itself, we're looking at multiple for NQ and ES. So you got the NDX, and we also have QQQ. So we have that kind of map. But you get a lot more data here with GexBot as well. So if you wanted that details, like definitely use the app. But you'll definitely need a subscription there. You'll need an API key and all that. Wanting to kind of learn more about the indicator here. So basically this indicator draws the GEX levels on your chart for you. It queries the GexBot API every 30 seconds. Now you can configure this to be more than 30 seconds. 30 is just like good enough so you don't get rate limited too much or at all. And then for charts, like I mentioned, for NQ and ES, you got 2 sources per chart, which is good. Then we have a live info box, which I'll demo. And this package, so it's one DLL file, but it comes with 3 separate indicators. So you get one for NQ, one for ES, and one for gold. And talks about the levels again. So we'll have your 0 GEX, your major 1, your major 2s, right? And so you can kind of see what that looks like. It also has the ability to highlight confluence zones between the different sources. And there's info box, which I'll demo live, but it kind of just shows you like information there that you can switch from summary or detail. And then more of information of like what all this means. So you definitely check that out. So I guess one note here on how the indicator is built. So for NQ and ES, because we're able to get both the current spot price and the current GEX levels at the same time, the conversion that it does for NQ QQQ prices is real time, right? So it's just like, okay, here's the current price of both. You can convert the levels based on that. And so it's going to be, it's kind of dynamic, but it's also accurate because it's basically just taking the current price of both Qs and NQ at the same time, doing the conversion every time. For gold, because there's no, so because GexBot doesn't have a GC futures ticker, right? Like we'll have to do the conversion kind of on the back end. And so it does that basically on the back end and kind of does all that. But it tells you what the ratio is, so you have that visibility. And so more information here. This is a pretty comprehensive page. It talks about all the settings and everything, how you do all the stuff. So definitely check that out. It's also linked into the indicator as well. So in the about section, you can kind of click off and check it out. And so we'll hop into the demo of it. Okay, so this is what the indicator looks like on the chart. So you can see the info box here, and I'll get the settings and everything, but really quickly, you can kind of orient yourself here. So you have price, you can kind of see here's the 0 line for QQQ, but also you see here's the 0 line for NQ, right? And so they're kind of wide. And so for me, like you kind of see how price has been chopping between this level. This is what you would expect between these two, because it means that like for NQ, this is like negative GEX territory, but for Q it's positive, right? And so we're still trying to figure things out. And then you can kind of see where all the levels are, right? And so those are kind of the levels there. For the indicator options, so you can color code everything. So we'll collapse that. Well, I'll have to blank out this API key, but this is where you'll put your API key if you have GexBot Classic. You need at least GexBot Classic to use this, so you put your API key there. This documentation, so if you wanted to get straight to the documentation I was just sharing, you can copy and paste this, or you can just click off here for this more details. It'll open up that page for you so you can kind of check that out. But if you wanted to maybe not show the info box, you could do that. If you wanted to not have any labels, you could also do that. If you wanted to highlight confluence, so you can kind of see like, hey, these are where NQ and QQQ levels are kind of near each other within like 50 points or so. And so you know, okay, like these zones are important. So, you know, we're kind of in that thing. You can adjust the tolerance for that, like how many points you want that confluence to happen. And so that's essentially the indicator. So when you have, and then so the info box, it shows you like where 0 GEX is, where 0 GEX is from a QQQ perspective or a SPY perspective. And then it gives you a note of like, what does the volume GEX look like and the open interest GEX. And it tells you, you know, if it's positive, then you have a little hint that says, you know, we're kind of in a positive GEX profile. So moves you would dampen the moves, right? Like dealers are going to dampen the moves, and so, you know, like you would have that idea. And there's a cool data point that we get from the GexBot API. So there's this delta bias, right? And so you can kind of see here it says calls are favored, delta bias, calls are favored. So this does a calculation of all out of the money options. So out of the money options are basically options that are far away from the current price. And it basically compares the calls and the puts. So who's betting upside, who's betting downside. And so it just gives you a nice little indication from an options perspective, where is more money or more trade, and does that represent more call and more put directional bets. And so that's a cool little indicator there. So you can kind of have that to give you a little bit of a bias. I find it is pretty, I mean, again, like options, they expire at the end of the day or the end of the week. You know, for intraday trading, you have to kind of keep that in mind, like the levels and all that, like they're longer time frame than just like a minute, 5 minute, 10 minutes. Like they're at least the whole trading session if it's 0 DTE, but at least you have an idea of the bias for that session. So there's that. And then, so you can also change the time frame. So, or actually I'll talk about the info box here. So you can switch it to summary. And so this is the summary thing where it takes up less real estate on your screen. Well, it just kind of shifts the shape a little bit, but it gives you 0 GEX and then the distance from price, right? So how far price is from 0 GEX here. So you're only plus 3 points, and here you're plus 80 points, right, on the Qs. So you have that. And then it gives you, like for GEX, just a quick view of like what profile or regime are you in. So here it's like GEX, we're positive profile, it's stable. It's stable because volume and open interest agree, right? So they're both in a situation where the moves will be dampened by market makers. So you can say, okay, we're stable, we're in positive GEX, and then, you know, you still get the delta bias as well. So calls are still favored. Even on the Qs, you know, we're stable and positive, so you can expect, okay, like we're in a positive regime, expect, you know, reversals, slower movement, things like that. And so that's, you can kind of check that out. And then also you can pick, you know, if you want 0 expiry, so expiring today, next expiry, so levels will change a little bit. You can kind of see, you know, delta bias is a little bit mixed between the two. Or you can do full. So this looks at the 90 days, so, you know, it's kind of what it is. And then I put this in here called P&D combined. So it's Friday, it's the end of the day on Friday, so a lot of levels are going to be matched. But, you know, beginning of the week and middle of week, you can put it on this setting to kind of see if there's levels where you have confluence across 0 DTE and next and full, or any of those combinations. So that way it gives you a stronger just confidence in a level. So you can kind of put this and see, okay, like which levels have the most confidence, have that in your mind. And then for me, I would always go back to 0 DTE because that's what I want to trade. But you can kind of use that just to see like the higher confluence levels. So yeah, I mean, that's the quick demo of the indicator. I guess we'll kind of hop over to, in general, like how I use this for trading. Okay, so this is my trading chart, my 1 minute. So I have it on with all my indicators here. And so generally how I trade these levels, first is obviously I do pay attention to this kind of delta bias. And so, like if calls are favored, like obviously you want to look for more upside. But then I'll have my candles and everything. But basically the way that I trade them is you want to just see how price reacts when it gets there, right? And so like here, if you see here, I think this level, let's pretend that this level has been consistently here, right? So this happened before the market opened, and I think the market opened here, right? Yeah, 828, here we go. So market opened around here. And so, the first thing is like I would look at this and say, so first thing I would do is I would open, or market would open, and it's like, okay, we open, I think we opened here, right? Yeah, we opened here, pushed up in the VWAP. And so it pushed up in the VWAP for me, but it was also a negative GEX level, right? Volume was on the downside, so I obviously took a short, right? because it pushed into it and then it flushed back down, and I was like, okay, you take a short with that, follow price, and you got a nice scalp out of that. And then as price kind of breaks up, it's above VWAP now, so like in near term you don't necessarily want to short right away, especially when you're so close to VWAP. And so you just watch and kind of see what price does, but the next target that you look for is going to be up here, right? And so if you're looking for upside, like you would want to have this target, this major level here, right? Or this major level where you have two clustered here, right? And so like I would kind of look, if you're looking for longs, you have VWAP, it's actually kind of has a confluence with this level here. You got some imbalance and all that, so it's like, well, like you see this push up, we're turning green. Looks like there was some imbalance there, like you could have bought, have your stop below VWAP, which also is below this level, so you have like stronger confidence there, or you can put it below this imbalance. And ideally you would want to go for this target. Now you would have probably been taken for a ride and almost stopped out, and eventually you get there. And then when price gets here, because now I know we're in a positive GEX mode, I would actually look at this level for price to kind of fall over. And it fell over a little bit, but it didn't turn gray or anything, so it's not something to join. But because we're in positive GEX and we're trending up, like you would want to buy the dip, right? Because it falls over, it's like, well, we were trending up, like the dealers are going to buy, so you'd buy that and you kind of keep going. And so that's essentially the theory. Just use them as targets, use them as confluence levels and support and resistance. And especially if you're in negative GEX mode, you want to like go with the move. And if you're in positive GEX, you want to kind of go against the move, but join the broader trend. So it's like go against the move, but go against like the near term moves at the levels, but go with the broader trend, right? Yeah, so hopefully that helps. If you have any questions, hit me up on Discord or YouTube. Let me know if this was helpful. So good luck, and thanks for sticking around, and don't get caught. Thank you.